Good morning, everybody. Happy Monday. It's July 8th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our daily bites. We're running a little bit late today, but better late than never. We have a big week on tap for us, so let's get to it. Don't forget, tomorrow and Wednesday, two-day testimony by Chair Powell on Capitol Hill. One day is going to be in front of the Senate, and the other day is going to be in front of the House of Representatives. And this is a twice yearly testimony by Chair Powell, where he's talking about the economy, interest rates, inflation, some of the other things that are on the minds of Americans all around the country. So he often tries to massage his words in terms of the answers to some of the questions from Congress and the Senate, meaning he's trying not to telegraph monetary policy in these two testimony days. So he'll probably say something that's maybe a little bit awkward to some of the members and maybe some of the people out here. But let's be clear, he is highly unlikely to shift away from what he said last week in a Q&A, and then also the prior week when we had the last meeting minutes came out, and then again a few weeks ago, about 3.5 weeks ago, we had the last Fed meeting. So I don't expect he's going to deviate from much of that, other than the fact that he's going to talk about inflation has been coming down over the past year or so, and that the jobs market may start to be slowing down a little bit, and it's probably going to what he really wants all of us to do is connect the dots and try and figure out, okay, is this where the Fed is going to pivot to an easing policy? They've already pivoted to a neutral policy. Of course, the last rate hike, or last rate move, was just under a year ago. It was July of late July of 2023. So since then, we've just been staying at 5.25% to 5.5%. Yet still, the stock market doesn't seem to be bothered by higher interest rates. At least the large caps. Now, the small caps are another story. First half of 2024, small caps have just been hammered. They just cannot get out of their way. And I think until interest rates start falling sharply, we won't see the small caps return. But I think that's a story for the second half. So let's take a look at interest rates here before we get talking about the markets for today. And you can see, look at this 10-year yield. It had a big about face here, right, on Tuesday, Wednesday, and Thursday of last week, and then followed through with another down day on Friday. But you can see here, looking at this parabola. Let me shape that a little bit differently over here. See clearly that interest rates have started to decline, right, on the long end of the curve. So 10-year yield from about 4.75 around April, we're now down to about 4.275, and probably making a run at this 4.2% level, which was the low in June, right? So it appears to me, of course, that we're kind of trading in this band here between 4.2 and 4.5 for right now in the 10-year yield. So if we break that to the downside, or we break it to the upside, the markets should move accordingly. Let's take a look at another chart of the S&P 500 here. Let's see here. So you can see here, back over here, 3 strong days in a row. Tuesday, Wednesday, and Friday, right? Of course, Thursday was a holiday. Tuesday, Wednesday, Friday. Sharp moves up, closing at the highs of the session. Good volume on Tuesday and Friday. Wednesday, of course, was a half session, so we didn't have strong volume, but still good, strong price action really matters. Good, strong money flow. MACD on a buy signal. What's not to like about this chart? It's overbought, right? But is that any reason to sell? No, of course not. Is that any reason to get bearish? Of course not, right? It is always a reason. There's always a reason to sell, whether it's overbought or oversold or just neutral right now, right? So if you're looking for a time to take profits, it's probably right then and there. So The markets seem to be looking ready to move higher this morning. Let's see, the S&P futures are up about 4.5 points right now. Let's see, hold on here. Let's see, sorry about that here. Bring that down. There we go. And we can see that the here's the internals from Friday. Let's take a look at that in just a second here. Apple's up strong this morning. The SPY is up about 0.1%. Nvidia's up a little bit over here. We're seeing good strength in Meta, which has been what a fantastic day on Friday. Netflix down a little bit. Google had a great day. It's down a little bit this morning. But some of these names have been very, very strong here. Amazon was up over 200 last week. So while the small caps have been kind of kneecapped here for the past couple months, you can see that there's some strength in there today, right? As yields are starting to come down a little bit, we're going to see some strength in the IWM. Now, where do I see the IWM moving in the interim over here? I got to see it close above 206, 205 and a half, 206. With a confirmation move above there. Otherwise, it's just kind of it's just floating in a no man's land here. It can get down to 197 and get back to 205 and stall. So once I can get a move above there confirmed, which is by a second day of trading above that area, yeah, okay, I'm interested in buying the small caps, at least for a move back up toward the 210 area. Okay, so I'm going to wait for that to happen. It might happen in a few days, but right now I'm not interested in buying it at this point. Last week was a real strong move from Tesla. We were on some of those calls last week and made some really good money. It's gone parabolic over here, as it often does. So at certain points in time, the chart really told the story here. We had a nice little base being built right after earnings came out. A lot of people were looking for that stock to take off after earnings, and it didn't. It probably disappointed a lot of people, which is how the big money really operates, right? How does the big money operate? Really, it's basically waiting for people to sell their shares, as they did over here, and they start stepping in there at certain levels. You can see that 170 level was a strong base built in on this pullback over here, right? One time over here, second time over here, and then all of a sudden it was launching the last week and a half. So that's something you got to watch and got to pay attention to. Don't get so excited as we have earnings season coming up. It's getting started this week. We have Delta, we have Pepsi coming out on Thursday morning. We have some of the banks coming out on Friday morning, and then early next week as well too. Something you don't want to get too excited about is jumping in on earnings on that first move up, right? Especially on a stock that's not at all-time highs. Now, if it's at all-time highs and it follows through, let's say the following day, then I'd say it's certainly ripe for a trade. So, but at this point in time, you saw this over here, and a lot of people got disappointed because it didn't follow through the following day, and they let it go. The big money steps in there and starts buying it, and they're in there for that big move that happened the last couple weeks. All right, that's how the game works. All right, part of the game works. So let's take a look at the internals here for a second before we get going here. Nothing really to write home about on Friday. I know the markets were up nice and strong on Friday, but still, internals weren't great. We had a medium look on the ADS-PD, rallying on the ADD, nothing on the bold. Ticks were pretty spread out between green and red. Volatility was down a little bit, so it wasn't anything to write home about. So maybe we'll get a little bit better action today or possibly tomorrow. We do have inflation reports coming out later in the week. Thursday morning CPI, Friday morning PPI, and those numbers were actually pretty good when they reported the May numbers last month. So let's see if we get a follow through on those reports later in the week, and maybe we'll see interest rates start coming down a little bit further. So and then if that's the case, we'll see small caps as well too. As far as the banks are concerned, later on this week, I do like Goldman Sachs, and I do like JP Morgan into their earnings. But if they do make a move over 210, I'm probably going to lay back a little bit. It's 205 right now. If they do make a move over 210 before earnings come out, I'm probably going to be pulling back a little bit on the calls that I have. Pepsi and Delta, probably going to pass on those for right now. I'm just going to step back and watch. I'm taking a new strategy this earnings season, and I'm going to just step back and wait and watch, see how the stocks end up moving afterwards, not necessarily getting into some of these names prior to earnings. Okay, that's a little bit new strategy for me, but I think at this point in time, we've seen a lot of these stocks making huge moves into the earnings prints whenever they come out, like Microsoft and like Apple and so forth. So unless they hit lights out and give lights out guidance, I don't think there's going to be a huge amount of upside there, and there could certainly be some selling on the news. So keep an eye on that. All right, that's going to be it, everyone. Have a great day. I'll see you guys back on Thursday morning. Great to be with all of you today, and thank you for retweeting the Daily Bites out. And don't forget, we have a webinar coming up in a couple of weeks, so make sure you sign up for that. It's going to be the instructions will be out on social media and in your email box within the next week and a half. So have a great day, everyone. I appreciate all of you spending a little time with me. Good luck, good trading today. I'll see you in the chat room later on today, and take care. Have a great day. Bye.